earnings season is still going on. Yeah, I know FANG has reported and Microsoft, but the fun continues this week with over 1,400 companies yet to go. A lot of them are some smaller, quirky companies, but some other big names outside of the FANG that you should be watching. So, as usual, I dug through a lot of the names to find the best, the earnings all stars, those everybody's going to be watching, and I brought 5 of them here for you today. What are they? Let's dive right in. The first big name we're going to see this week is Disney. And as you can see, it's been kind of a crazy, volatile 5 years for these shares, but they did break out to new 5-year highs there in 2019, finally getting a boost from everything going their way, from the movies to the parks, and then obviously the virus hit, and you can see the results in the shares. Now they are up off their lows, but some of the main big analysts have been downgrading the shares heading into this earnings report, mainly because obviously we don't know when the parks are going to reopen or what it's going to look like when they do. So this is going to be one of those earnings where you want to listen in on the conference call, and the beat or the miss isn't really the major thing. Also, be sure to listen in on what they're doing with their China parks, because those have been closed even longer. So that can give us kind of a clue about where they're heading. They have Disney Shanghai and in Hong Kong. So be sure to watch those two. And then we're going to switch over to an area that's maybe doing a little bit better here. Activision Blizzard, ATVI is the ticker. And as you can see, they haven't missed since Zacks data began there in 2016. The big sell-off happened in 2018, and now the shares have been on the rise ever since without much of a dip for the virus pullback. And now we're back at basically 2-year highs here. So this is one that could actually see a decent earnings report and outlook given all the excitement now over gaming with everybody stuck inside. So this is definitely one to watch this week. And then switching back to another company that's going to have some issues here with the virus because of what their business is. So Planet Fitness, great track record. I've called it a beast in the past. It hit those new highs early in 2020. Shares, obviously tanked on the virus news. All their locations are shut down, but they will start to reopen. And what does that look like? How many people are going to the gym over the next couple of months, and what's going to happen with their number of subscribers and this kind of thing. So Planet Fitness, it's key to listen in on this conference call. Their CEO has already been out doing interviews on CNBC and elsewhere about what the business might look like. So if you are an investor or thinking about getting in, this is definitely one you're going to want to listen in on. And then we're going to switch back over to someone who's breaking out, Wingstop. WING is the ticker, and obviously they are basically a delivery chain. They were already hot going into this, and then people got a little nervous when obviously no one knew what was going to happen with delivery or store shutdowns, but the shares have rebounded quickly there. They are coming off a rare miss last quarter, so we'll see what happens this time. But I know from my own experience that I was taking advantage of their free delivery during the shutdown, and I'm sure a lot of other people were too. So Wingstop could be, like Domino's, one of the big beneficiaries here on the changes of eating at home. And then we're going to switch over to another company, Shopify, SHOP is the ticker, SHOP, that's also busting out to new highs. This is going to be a big one this week. Hasn't missed since our data began there in 2017. Some big beats there. That's what those long green arrows mean. And now with shares busting out, I do have to say they're not exactly cheap, trading at 31,000 times earnings. I had to double check that. Expected to only make 2 cents this year, down from 90 cents 3 months ago. Obviously, those estimates have come down, but they made 30 cents in 2019. So expected to only make 2 cents. And so that's why with the surge in the shares, you're getting a 31,000 times. But let's be honest, nobody's buying these for the valuation here. It's all about the business. And with so many businesses needing to go online and do online now capabilities, they should be doing well. So Shopify, definitely one to tune in. As you can see, there's still some hot charts out there, even with the recent sell-off. Now we have the rebound, and people are trying to estimate what businesses are going to benefit here, even with the change in consumer behavior and businesses, and they're diving into those. So don't miss a single one of these videos. I'm bringing them to you now from my house. So we want to be watching all the earnings all throughout this week. As I said, 1,400 companies reporting. It's a huge week. And I'm going to be bringing you a few more later on this week. And as always, throughout earnings season, I'm going to be covering all the big names. So you want to subscribe. Be sure to tune in on YouTube. We're at also, you can get that YouTube link at zacks.com/YouTube. Follow me on Twitter. I'm tweeting out the conference calls, the live tweets there, as well as more charts, because obviously I didn't cover 1,400 charts today. So I'll be bringing you a whole bunch of other key names throughout the week and all throughout earnings season. But you can follow me there at Tracy Reinick, but be sure to get us somewhere, and I'll see you again next time with some more charts.